Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Lawerence Roulston. We're going to be focusing more on the copper market, what Lawerence is seeing in terms of some of the fundamental drivers, and also discussing the volatile price moves that we saw, that spike above $5 a pound in May, and subsequent almost straight line back down to right around $4 a pound as we are chatting right now. Lawerence is the president and CEO of MTB Metals, traded on the TSX Venture Exchange under the symbol MTB and on the OTCQX under the symbol MBYMF. Now, Lawerence, as I said, I just want to focus on the copper market here. That run in May being widely considered as a short squeeze higher as more interest came into the copper market. We saw paper traders run that price higher, and now it's completely reversed. Broadly, we can say that copper has, in a way, repriced itself post-COVID as $4, even down to $3.50 is a floor for the copper price. Lawerence, what's your takeaway from the changes in the copper market now, post-COVID, and this generally higher price we're seeing?
Well, the fundamentals of the copper market are overwhelming. Demand is increasing steadily. Electrification, and in particular, electric vehicles are really enhancing demand. At the same time, there's serious constraints on supply. So, looking at these fundamentals, it's not surprising that the speculators got involved. I think the run we saw earlier this year was pretty much a speculative run. And it kind of petered out and settled back to what has now become a very strong level of support around or just under the $4 level. Bear in mind that over the last 4 years, the price of copper has more than doubled at its current level. So there's a lot of strength. There's a growing recognition that fundamentals are strong for copper, and it's almost certainly going to go higher in the fullness of time. And I've been saying this for a long time. Let's not get too distracted by the short-term frothiness in the market. It was great to see that run up to $5, but I think it just got a little ahead of itself. It's come back to a very strong level of support. And, you can see how much support there is there when you see the likes of BHP bidding for Anglo American. And bear in mind that BHP's plan there was to keep all the copper assets and spin the rest of the Anglo business out to, I guess, basically create another public company. And the same Glencore going after Teck. And again, being rebuffed because the holders see a higher value than was being offered based on where the price is at this moment in time. So longer term, there's certainly a lot of upside in the copper market.
So, Lawerence, when we talk fundamentals of copper, we keep on hearing about how demand is far going to exceed supply. We even had reports that we were going to run out of copper by the end of the year. That one seemed a little bit overblown. But what are some of the key fundamentals for the copper market that you are focused on?
Well, look, on the demand side, long term, just based on population growth and industrialization, all the rest of it, there's been about a 2% a year annual growth in demand for copper. Now, the electrification and the electric vehicles in particular, but all the components of electrification, the whole green energy movement, wind turbines and all this stuff, is adding a very significant element to demand for copper. At the same time, there's constraints on supply. Mines are being depleted all the time, of course, because any mine has a finite life. But in addition, the existing mines are going to progressively lower grades as the high-grade material has long since been mined out. They're getting deeper. They're mining lower-grade material, and it's getting harder and harder to even maintain the production level. The industry needs to build several big new mines every year just to stay flat, let alone keep up with the growing demand. And it's getting harder to do that. In Chile, biggest source of copper, water is creating an enormous constraint on the ability of the industry to build new mines. They're having to pipe water from the sea level high into the Andes to have the water to process the copper concentrates. And around the world, and then you see things like the first quantum situation in Panama, where basically the government just took over a multi-billion-dollar copper mining operation. So the industry is getting more and more reluctant to invest billions of dollars in questionable jurisdictions. So put all that together, it's really hard to expand the supply, which is why the likes of BHP and Glencore are going after existing producers so that they can build their own supply. But of course, that doesn't do anything to increase the overall industry copper supply situation.
So, Lawerence, what is the general cost of production then for the sector? I understand a lot of these are old mines that have been running for a while, but what is some of the data around how much it just costs to produce copper currently?
I don't have good numbers on that particular point, but what I can say is that the current price is not enough to trigger the majors to invest the multi-billions that are needed to develop new mines. So at the existing copper price, these large-scale development projects are marginal and will probably not get developed in the context of the copper price where it is around the $4 level. So they're going to be deferred. There's going to be more upward pressure on the copper price to get it to the level where the majors are going to start spending the billions needed to build the new mines to keep supply and demand in balance.
So to that point, we all know how expensive it is to explore for anything. But when you're looking at potential copper deposits, companies need to drill long holes. It costs a lot of money to delineate a large copper asset. Do exploration companies in this environment need majors or very wealthy backers to explore and actually find and prove out resources?
Absolutely. Yes, exploring a large-scale porphyry copper deposit is bloody expensive. And the majors are an important part of that. And the majors, they recognize the importance, how they recognize that it's vital that they get involved in early stage exploration to fill that development pipeline. And to that extent, a lot of the majors have now developed exploration offices in Vancouver. Companies that are based all over the world have set up offices in Vancouver dedicated to exploring for copper, particularly in British Columbia, but Western North America in general. But almost all of those exploration programs are built around doing deals with the juniors. And part of that is the juniors have the land locked up. And it's a golden triangle, which is one of the main focal points for the mining industry generally. Basically, every square meter of worthwhile geology in that region is held by somebody, and a lot of it is held by juniors. So to get access to the property, they need to deal with the juniors. But even more to the point, the majors just aren't set up. They don't have the mindset, I guess is the best way to put it, to do the entrepreneurial, innovative exploration that the juniors do. It's like any sector. The innovation comes from the small entrepreneurs and then gets rolled up into the larger companies. In mining, more than anything, in any other industry, that's been the history of exploration. The juniors take the risks, they do the innovative entrepreneurial work leading to the discoveries, and then the majors step in after the discovery's been made and help fund it, or and in the end, buy out the juniors. And we're seeing that right now absolutely unfolding all around us here.
Oh, just last week or a couple weeks ago, that major deal with BHP and Lundin Mining coming in to buy Filo. That was a mega deal for the sector, and it continues to be a sector where you need mega deals. These projects are expensive to build. When you're looking for potential deposits that majors would be interested in, obviously grade carries everything. If you have higher grade, that's always better. But I feel like copper is a game where you need the size, and people don't bring into production small copper mines, especially the majors. What sort of size, in your eyes, are copper majors looking for? Simply resource size, pounds in the ground.
BHP made it very clear to us in one of our very first discussions that their hurdle rate was 5 billion tons of contained copper. Now, obviously, they're not expecting to see that in an early stage exploration project, but they need to see that a project has the potential to deliver 5 billion tons of contained copper for them to take an interest in getting involved in the project. Now, putting that into perspective, the Galore Creek deposit just meets that hurdle. So that's where BHP stands. The other majors maybe aren't quite that have quite such a high hurdle rate, but they're certainly looking for scale. And grade is important, of course, but it's got to have the scale. And another thing that's very important that people lose track of is a lot of the copper mines in the world, especially the Arizona stuff and a lot of the stuff in Chile, is pretty much pure copper, or copper with a tiny bit of silver or moly. So they get fixated on a grade of a pure copper deposit. Now, when you're looking at BC deposits in particular, and the Golden Triangle in especially, these are copper deposits with a significant amount of gold. And the gold plus the copper grades can make it economic, even if the copper grade is less than you would expect in what would be a pure copper deposit. So we're seeing a bit of a misunderstanding, a misperception in the market when they look at deposits in the Golden Triangle, like the huge KSM deposit. And they say, oh, gee, that's a pretty low-grade deposit. Yes, if you look at the copper grade, it's a pretty low-grade copper deposit. If you look at the gold grade, it's a pretty low-grade gold deposit. You put the two together, and you've got a very economic deposit. And the best way to illustrate that is Newcrest, before they were taken over by Newmont, and in fact, the biggest reason they were taken over by Newmont was for Cadia. And Cadia is a alkalic porphyry, like the Golden Triangle type deposits, with copper and gold. And if you looked at the gold grade alone, you think, how can you possibly make money at that gold grade? Yet, Cadia, the all-in sustaining cost of Cadia, a year or so out of date on this, but was around $100 an ounce of gold. The copper byproduct paid for almost the entire cost of production. And or you could turn it around and call it a copper mine and say that the gold byproduct pays for almost all the cost of mining the copper. And that's what we're looking at in the Golden Triangle deposits that have copper and gold, and therefore the grade of each one is lower than people are used to, but the two together can make a very economic deposit.
So, Lawerence, when it comes to funding projects, these projects are expensive to build, and they've only gotten more expensive with inflation. But governments have said that they've designated copper as a critical mineral in some areas. And quite frankly, we do need more copper, and it seems like more domestic supply of copper. How do these projects get funded, and is it getting at least a little bit easier for companies to fund big builds?
Well, I think once it comes to the building stage, it's pretty straightforward. And the BHP Lundin deal with Filo was an excellent example of that. I was ecstatic when I saw that kind of cooperation. Once it's there, it's straightforward. It's getting from here to there, which is causing a huge challenge for the exploration sector in this moment. That and obviously we wanted to talk about the copper market, but just using MTB as an example here, so we did some very good work and we made a discovery. We've got a great deposit there. The majors are excited about it. We get geos that are looking at our drill core and our results. They get ecstatic, but then it gets into the milieu of the corporate side of the business. Weeks go by just trying to get a CA through the legal department. It's at that level where the challenge is. I think if we had a few more drill holes, they'd be all over us. But at this stage, we're having to work hard to get them to pay attention to a project at this stage. The geologists are interested, but it's the corporate side that are saying, well, show me a feasibility study. And, well, we're not quite there yet. And that's where the challenge is for the industry. You talked about critical mineral and government support. Well, the Canadian government has actually been phenomenally supportive, and in particular of critical metals or critical minerals, in that we have the enhanced flow through for critical minerals, which has been very helpful in getting funding for these projects.
So, Lawerence, I do have to ask you then, because look, it depends if you're listening to some diehard copper bulls or even those resource bulls that are saying copper could get to $9 a pound, even higher, double digits a pound in a fairly short period of time. A lot of those comments are simply used for marketing, but what do you think? Is that possible? Could copper go to $9 a pound in the near term, or is that simply overblown?
Copper will absolutely get to $9 a pound, but not in the near term. And I go back to when I was doing the newsletter and gold was $300 or $350. And people are saying, gold's going to hit $1,000. And people thought it was crazy. Well, here we are at $2,400, but it took a couple of decades. And in copper, I can see exactly that happening. That I don't know if it's going to be 3 years, 5 years, 8 years, but at somewhere we're going to have $9 a pound copper. I would encourage investors to not get distracted by the ups and downs, the frothiness in the near-term moves in the copper price or any commodity price, but to make an investment decision based on a longer-term perspective, and that comes back to the fundamentals. And rather than speculating on the commodity, identify a company that's going to benefit from the long-term fundamentals in the commodity market. And that's where you're going to make the big bucks. Companies that are going to add value regardless of what happens to the commodity price. And then as the commodity price unfolds over time, it's a bonus on what should already be an attractive investment.
Yeah, that's always the thing, right? Stick to companies that have an asset or have found something of interest rather than just buying a company because it has a certain metals name, whether it's copper, gold, silver, lithium, really anything, because you think that underlying metal or resource is going to go up a lot. We've all been burned in those stories, and quite frankly, we've all done, I think, quite well in some of those stories that have something of substance, an asset that works sometimes in any market, but at least it can stand companies out against all the other ones that rush into markets when we do see some certain commodities price spike. Lawerence, thank you very much for your time. Interesting to chat with you about the copper market. We've had a lot of commentators on copper and a lot that pointed out that short squeeze in May and the general repricing in the market, but the lack of movement in a lot of junior stocks. The majors have done pretty well. Gold companies are looking at majors. It's just when that money will trickle down into some of the juniors. Lawerence, thanks again for your time. Hope you have a great rest of your week.
Thank you, Corey. I look forward to talking again.